Crypto Kids, Merry Christmas. Bitcoin is 24 hours left. I asked the community in Telegram, guys, I said, it's Christmas. Do you still want an update? And you said, absolutely yes. In 24 hours' time, Bitcoin is going to make a decision on which way it wants to go to. We will give a summary of the technical roundup. We've given my predictions over the past few videos. I will summarize it once more. But the most important event is that in 24 hours, we're going to have the biggest options Bitcoin expiry in Bitcoin and cryptocurrency history. This cycle has been a cycle of institutional adoption. Options are commonly used for hedging and they're commonly used by institutional investors. The fact that we're seeing 23 billion of options expiring tomorrow just demonstrates how much institutional adoption Bitcoin has experienced. If you don't know what options are, I'm going to explain it to you with the help of Grok, and we'll cover what it would mean for the price of Bitcoin. So if you enjoy these updates, do me a favor and destroy the like button and subscribe for daily videos. We post regardless of anything. Even though I was in surgery, I still posted, and that's completely okay because I care about this and I care about you guys. So destroy the like button to show your appreciation and subscribe. Let's begin by explaining what options are. So I won't get into the nitty-gritty, but there's two types of options. There is a call option and there is a put option. I will begin with explaining, with the help of Grok, what a call option is. A Bitcoin call option gives you the rights, but not the obligation, which means you don't have to do it, to buy one Bitcoin, if it's a 1 Bitcoin worth of an option, at a predetermined price, which is referred to as the strike price, on or by a specific expiration date. You typically buy a call option if you believe that Bitcoin's price will rise, just like opening a long position, allowing you to profit from the upside, unlike a long position, with more limited risk. Your maximum loss is just the premium you paid for the option. It's just the premium, and the premiums can differ depending on how much time there is left for that option to expire, and that's referred to as the time decay. I'll give you an example. As of December 2025, with Bitcoin trading around where it is now, which is 88 to 87 and a half, let's say you buy a call option with a strike price of $90,000, expiring within 1 month, and you pay a premium of $3,000. You pay the 3K to be able to get that option. Premiums may vary based off of market volatility and time left, as I said. If Bitcoin rises to $100,000 by the expiration, remember, the strike price was 90. The option is now in the money. I've made money with it. I can exercise to buy Bitcoin at $90,000. However, today it's worth hypothetically 100K. So that's me profiting 10K, which is the price difference between the strike price and the current price, deducted by the premium I paid to purchase that option. So I would have made a net profit of $7,000. If Bitcoin stayed the same or fell, the option would become worthless and I would lose the $3,000 that I paid to get that contract. And there are no other further obligations. I can actually even sell that option before the time of expiry, but instead of getting back $3,000, I will probably get back much less if the price is stagnating or it looks like it's going to drop or there is no momentum. If obviously it is going closer to the strike price or is above the strike price, then it's just better to exercise the option instead of selling it into the open market. To break even, then you have to go to 93,000 because the strike price is 90. The premium I paid is 3, so at 93K I would be break even. An example for a put is that a put gives you the right, but again, you don't have to do it, to sell 1 Bitcoin if it was worth 1 Bitcoin at a predetermined price, which is the strike price on or by a specific expiration date. You buy a put option if you believe that Bitcoin's price will fall, allowing you to profit from the downside with also limited risk. Your maximum loss is just the premium you paid for the option. Example, let's say you buy a put option with a strike price of 85, expiring within 30 days time. You pay a premium of 3K, and that's the cost to hold the option. If Bitcoin falls to 75 by expiration, you've made money. You can exercise it to sell Bitcoin at 85K, but it's now worth 75K, and you would have profited $10,000 minus the 3K premium, and you would have made a net profit of $7,000. If Bitcoin stayed the same or it rose in price, then the option expires worthless and you would lose the 3K premium and you would have had no further obligation. The break-even price would be around 85 because you need to, sorry, it would be 82 because you would need to subtract the $3,000 premium. So that's a very, very basic explanation into how puts and calls work. It's super basic. Like honestly, it's a very complicated concept and it takes time to understand, but I just wanted to give you a very simple understanding of how options work so that we can make sense of the options expiry taking place tomorrow. I'm personally looking to get more involved in options and I may incorporate it into my trading at some point in the future. That could be a 2026 resolution. So looking at the chart of options, the blue bars represent calls and the yellow lines, the bars, they represent puts. So blue is essentially people that are expecting bullishness for the markets, and there's a lot of people expecting bullishness much more than expecting bearishness. And then the yellow obviously is clustered to the downside. The current call open interest is 195,000 and the current put open interest is 73,000. Again, it shows you the ratio of how many more people are bullish compared to bearish. And then there's another important point, and that is the max pain price. The max pain price determines at what price, if Bitcoin went to, would the most amount of people essentially lose money and the market makers would earn money. You guys know that markets move in a direction where most market participants lose and the market makers make money. And I went into Grok. We tend to see option expiries at year ends, at quarterly ends, maybe even daily ends. And I wanted to go into the recent couple of years where Bitcoin had options expiries taking place at the end of the year. And I wanted to demonstrate to you why Bitcoin mostly goes to that Stripe max pain point, which is for us now $96,000, and that's where most market participants make money. Remember, it's Christmas, it's low volatility, so whichever direction that Bitcoin decides to break to, again, I'll share my views in a second, it will go to that level quite fast due to a liquidity in the market. All right, so if we go to 2021, 7 days before the expiry, the big contracts expiry, options expiry, Bitcoin was at 50K. All right, and then the max pain point was between 48 and 50. So the price on expiry was at 46 and it was only $2,000 away from the max pain price. All right, and when we look at the put to call ratio, it was slightly on the bearish side, and this is why Bitcoin went down on expiry. Currently, it's bullish. It's mostly bullish. Then in 2022, 7 days before the big expiry, Bitcoin was at 16.7. Price on expiry was 16.6. Max pain was between 16 to 17. There you go. You went and you were at that max pain, and most people lost money. The put call ratio was at that point neutral. In 2023, 7 days before expiry, Bitcoin was at 44. On expiry was at 42. Max pain was between 40 and 42. So Bitcoin actually moved down. It moved down into the max pain area to make sure that the market makers profited as much as possible. And that happened even though there was a more bullish skew on the put to call ratio. Last year, the price of Bitcoin 7 days before the expiry was at 97.7. On expire was at 94, and the max pain was at 91. So it tried to get to the max pain, but the overall skew was a bit bullish, so it couldn't quite get there. So looking at that data and looking at what we have presented us, we know that the skew is quite bullish, right? Most people are expecting a bullish upside. And then our max pain price is above where the price currently is. So looking and analyzing that data and that data alone, I think it makes sense to assume that Bitcoin has a higher chance of breaking to the upside than to the downside. Obviously, this is not data that we should fully rely on to trade with. What it tells us for a guarantee is that tomorrow will be a volatile day. When I say tomorrow, I refer to the 26th of December, 2025. And I'm sticking with my technicals. I'm sticking with my own trading setups, which is shorting Bitcoin between 99.5 to the 200 daily moving average. If Bitcoin can break above $91.8 thousand with 2 daily consecutive candles, I think this jump in price will be relatively quick. But instead, if we lose 84.6, then we will likely collect the liquidity below the April 2025 lows over at $74,000. And guys, this is where I'm going to end off today's video. I hope it was interesting. I hope it was educational. Options trading is a tough concept to master. Don't worry if you didn't quite get it today. It's all right. We'll make more videos about it in the future. But I just want to say thank you for watching. Merry Christmas, and I'll see you all very soon. Probably tomorrow if there's a breakout. Take care, and as always, bye-bye.